Hello and welcome to our Minds and Money 5 at 5 show, which for this edition is sponsored by White Rock Minerals and Los Cerros and is brought to you in association with the Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m. throughout various time zones, is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. A few admin announcements before we start. To make it as interactive as possible, please have your videos switched on. And to ask a question, you have two options. You can either submit them via the chat function. You'll see the chat function is at the bottom of your screen, or you can also wave your hands via the invite participants button. I can then unmute you, and then you can ask your question live. We'll also be having polling questions throughout the webinar where you can vote. For this week's show, for today's show, we have a gold theme focus, and we have a great lineup of guests. We have Warren Gilman, Chairman and Chief Executive Officer of Queen's Road Capital. We have Kate Southwell, General Counsel of Parlour Investments. We have Jason Stirbinskis, Managing Director of Los Cerros, which is an ASX listed company, and Matthew Gill, Managing Director and Chief Executive Officer of White Rock Minerals, which is also an ASX listed company as well. So let's start off with an ASX related polling question. Which stock exchange will perform best for listed mining companies in 2021? And you'll see some answers coming up on your screen now. And whilst you're sort of like voting, I'm just interested to bring in one of our guests, Kate from Parlour Investments. I mean, what would your answer be? And then I guess also the follow-up question, I'm quite keen to find out a little bit about Parlour Investments' mining outlook for 2021.
Sure, thank you, Andrew. Great to be here, and good morning or good evening, everyone. I think in response to the poll, it's one of those questions that there's not really a one-size-fits-all answer. It always really depends on the company and where the projects are located as to what the best exchange is to be on. One of the themes I think is quite interesting recently has been seeing the TSX listed gold and precious metal companies choosing a dual listing either in New York or in London. We've seen a number of moves towards a dual listing, particularly in London. So there's Yamana, Endeavour, Wheaton Precious Metals, a number of others, the Nordgold IPO, I think, which is coming. So I would say flavor of the month at the moment is possibly London, either AIM or the LSE. But people always need to be mindful, obviously, of the listing rules themselves. And I think one other thing to comment on is in the UK, obviously, there's a deep in institutional investment interest in mining stocks, and there has been for a long time, but there's also a real shift in the ESG landscape in the UK, and almost all, if not all, of the UK institutional investors are now signatories to the PRI. So mining companies who are looking at a potential listing should obviously be considering these matters anyway, but one thing to keep in mind around which will be the best exchange to list on in terms of access to capital is really dependent on the company itself. Then maybe just to touch quickly on your question, where do we see the world? Well, like most people, we're entering 2021 with a bit of an optimistic view. I think you have to be optimistic, but there's certainly some structural changes that are supporting the high commodity prices that we see today, which is great for our sector. I think the two key thematics that we're watching and have been watching carefully for a while are obviously decarbonisation. The impact of the Biden administration in the US is going to have a huge impact. And we're already seeing the impact of that, the increased, the commitment to the Paris Agreement, increased commitment to decarbonisation, to green energy and infrastructure will be very positive. And the other theme that's driving all of our lives, and your question earlier, the vaccine rollout is something that we're watching, and the success of the vaccine rollout really will have a huge impact on the macro landscape for this year. So we're looking optimistically towards this year, but we're pretty much aware of all the volatility and the potential bumps in the road that may be ahead.
Warren, what is your mining outlook for 2021?
I thought you were going to give me the easy one.
No, sorry, Warren.
I'm going to answer the easy one. That's
okay.
The ASX. The ASX is going to outperform.
Why?
Because the ASX, I like to think of it as a little hothouse. There are a whole bunch of little tomatoes that are listed in the ASX, and they get all sorts of sunshine, and the heat beats down, and There's nothing really else to do. So all those great little Aussie companies just run like hell. Aussie investors generally like to stay close to home, and they bid the hell out of those local favorites. So irrespective of value, I think the ASX is a great place to be listed. And I think it's proven itself out in the last few years. So that's my view. Easy one.
Yeah. And am I allowed to ask you the slightly harder question? What's your mining outlook for 2021?
It's pretty much the same, Andrew, as it is for 2030 and every year in between. It's going to be a fabulous decade to be in the mining business. So let's start enjoying it now. It's going to be a great year.
Yeah, because you've obviously been in the industry for, I don't know, is it 20 or 30 years now, but how does this sort of like boom sort of like compare to previous ones that you've been in? Same, bigger, different, and then if so, how?
Off the charts, Andrew. It is off the charts. It's extraordinary. When things are this good, one obviously has to look over one's shoulder and wait for the boogeyman to jump out and get us, because life isn't supposed to be like this. It isn't supposed to be this easy. And you know that it won't last forever. But I guess since we've got free money for a while, it could last longer than we all expect. So that's a cautionary note on equity valuations. It's not a comment on commodity prices, where I think we're probably in a 10-year bull market. So commodity prices will probably be good. I just worry about equity valuations.
And obviously you're based in Hong Kong, obviously just across the border from mainland China. How do you, Kate in her answer, she talked about the incoming Biden administration. What impact do you think there will be on US-China relations, and are there any potential impacts in terms of on commodity supply chains?
Yeah, two very different questions. I think, American politics is such that there has to be a lot of posturing. And the Biden administration will appear to take a tough line. But at the end of the day, I think they're a lot more pragmatic and constructive than the previous administration. So in matters of trade, I would expect things to actually normalize. Things will be calmer. On the geopolitical stage, there's going to continue to be saber rattling. I think China and the US, they're all grown up and they're big boys, and they know how politics work. They know how domestic politics work. We have to differentiate between what's there for public consumption and what is actually happening in the real world. And I think I'm a little bit more constructive geopolitically than a lot of the headlines you read every day or see in the various news programs. Maybe that's slightly colored by the fact, Andrew, that I've lived in China, quote unquote, for 20 years. But I'm a hell of a lot more constructive, I think, both economically and politically than most. And again, that goes to support my view of commodity prices, demand, and the general environment for us poor folks in the mining business.
Thank you very much for that, Warren. Jason, would you have voted for ASX? Presumably with your company listed on the ASX, or would you have voted differently?
It's a borderline. I think the ASX has had a good year and it will have another good year. I'm quite sure of that. But I think the TSX has plenty of opportunity going forward, I think. I was talking to someone earlier today that was very bullish on the TSX as well. So that's kind of weakened my resolve about ASX being the best. I think it's going to be great, but I think TSX will be up there also.
Yeah, and I guess that's one follow-up question, which I guess sort of like I sometimes struggle to understand, and I don't know whether you can explain to me and explain to listeners, is that in other countries you often have the junior exchange of TSX Ventures and then the senior exchange of TSX. Here in the UK, we've obviously got AIM and LSE. Why does the ASX only have one exchange, and is that a help or hindrance?
I think it's a help for us. You're up there with the big boys on the same exchange with them, so there's no sort of segregation of the juniors with the big end of town. To be honest, I'm not sure why we would not have two. There are a few smaller exchanges here, but nowhere the profile of AIM and similar. Yeah, I think the size of the market suits having the one board.
Yeah. Okay, thank you very much for that. Matthew, I mentioned earlier that you're on the ASX, but of course you're also on the US-based OTCQX best market as well. So I'm just interested as to what is your sort of thoughts on the answers to the which exchange question, and also I guess the obvious follow-up is why you also listed on the US-based OTC market as well.
Yeah, look, good question, Andrew, and thanks for the opportunity. Look, to Kate's point, to a degree, it depends on projects and jurisdiction. However, my experience is that a good project should attract funding no matter what exchange and where the projects are, as a general comment. And I think that's borne out by White Rock's experience. We've got a project in Alaska. We've remained ASX. We raised twice our market cap last year. So we didn't need to go to the TSX or the TSXV or the Canadian Securities Commission, the exchange, the CSE. We've looked at AIM, we looked at other exchanges, and at the end of the day, to Warren's point, we felt that the ASX was as good as any of them. But we deliberately did make it easier for US-based investors by getting a cross-listing on the OTC, which is out of New York, so that a US investor in a US time zone with US currency can buy and sell White Rock shares. So that was our compromise to expanding our net. But we looked at TSX, we've looked at the CPC, the prepared shells that are available on the TSXV. And at the end of the day, and talking with companies that have dual listed in Australia and the TSXV, we on balance felt that the ASX is a good home to be, to Warren's point. But to Kate's point, expanding it a little bit into North America through the OTC, and so far that's worked really well for White Rock.
Okay, thank you very, very much for that. Elaine, can we just have the polling answer up, please? Yes, so ASX just like won that 52%. So thank you very much for all the panelists' comments. So without further ado, let's move on to our first mining update. We've actually heard from him before, but Matt Gill is a mining engineer with over 35 years experience. He's got a strong technical, operational and executive management background. He's worked in roles ranging from an underground miner, supervisor, department head and site operations general manager through to CEO and managing director. Matt has previously worked for the Singapore-listed Linegold Corp, Renison Goldfields, Placer Pacific, WMC and Rio Tinto. And he's currently Managing Director and Chief Executive Officer for ASX-listed White Rock Minerals. Matt, over to you.
Look, thanks, Andrew, and thanks to the Mines and Money team for this opportunity. I will go fairly quickly through this, a few minutes. The listener can find this subsequently on the Mines and Money. It'll be uploaded, but also we have a website and we have a more fulsome presentation there. But to be brief and to the point, as touched on, we're ASX listed, but with a cross listing on the OTC. And the reason for that is that we have a major project in Alaska, the Last Chance Gold prospect, and also a high-grade silver zinc prospect, both in central Alaska. And we've also got here in Australia an advanced gold and silver project. So the reason for being on this precious metals conference is that we are well endowed with gold and silver in 2 jurisdictions and two projects. A little bit on our capital structure, 13 million cash in the bank, nice tight structure, 70 odd million shares on issue and a market cap around 40 million. Great shareholder base. We've got institutions ranging from Acorn Capital, Cartesian, Gold Mountain Asset Management out of Hong Kong, Commodity Capital out of Zurich. Our largest single investor is out of Denver, Crescat, and we've got some high net worth. So a nice mixture of institutional and retail. And I do encourage the investor listening to look at that, because they're examples of people that have done their own research and have put their own money into White Rock based on that. And that should give a potential investor some comfort. Next slide, please, Elaine. So very quickly, the board, 2 of us are mining engineers, 2 of us are in corporate finance and business development, and ably supported by Rowan, an exploration manager who's worked around the world. And mid last year, a very important addition to the team, Quinton Hennig, for those that may not know him, founder of Novo Resources, very successful Pilbara explorer and developer. He's a very busy man based in Denver. He's on many boards. He's a great economic geologist. So he's a great support for White Rock technically, but also opened up the North American market for White Rock on the back of our Alaskan asset and being able to raise the money that we did last year. Elaine, next slide, please. So that's just a bit of a joke. It is Red Mountain. Geologists are very imaginative with what they call the projects, and that's our Red Mountain project. I just do have to say one of the resources in our JORC resource that makes up the Red Mountain asset is called WTF, but I'm not going to explain any more than that. I'm happy to talk to people about that afterwards. Geologists do have a sense of humour. Elaine, next slide, thank you. So Central Alaska, a 9 million tonne JORC resource, grading 600 grams per tonne silver equivalent, so significant. Dominant metal is zinc, so 13% zinc equivalent if you looked at it that way. Alaska is a great jurisdiction. I do encourage people to have a look at it. It's in the top 5 of the Fraser Institute. Next slide, please, Elaine. So not only a VMS, but we have this significant 30 square kilometre gold anomaly. It's in the Tintina Gold Belt that hosts the likes of Pogo, that the Australian company just purchased, Fort Knox, Donlin, and that was our discovery in January last year, and by July last year we were drilling that. So that's a great example of how good Alaska is, that we went from discovery to drilling in only 7 months, and I would challenge many companies to do it that quickly. Next slide, please, Elaine. And then not to forget our child here in Australia, Mount Carrington, feasibility study, JORC resource, JORC reserve, inland from Byron Bay, past mining, great financials. It has an environmental approval step next to go. Next slide, please, Elaine. So with that, very quick, very short, hopefully sharp. Happy to take questions, happy to encourage the listener to go to our website or set up a meeting through the Mines and Money website. I'm available for the next few days through that. So thanks, Andrew. Over to you.
Okay, I'll probably kick off with the first question. What's next for the aggressive program at your Last Chance Gold Anomaly project?
So with winter, some investors go, oh, it's winter, you know, not much is happening. A point I'd make is we've still got news flow coming from last year. The beauty of winter is it allows us to analyse fully the huge amount of data we collected during the summer and plan the program. So at the minute we're in the planning stage, Andrew, we're well funded. We could actually fully fund a 2 drill rig program there again this year. But given that we've got this high grade silver zinc VMS, which we didn't drill last year, but we did the previous 2 years, we're contemplating whether we should actually have a 2-pronged approach and drill the large gold anomaly, which we only discovered last year, as well as adding to that high grade silver zinc VMS, which is open along strike down dip. So we will be back in Alaska, absolutely. It's just a matter of in what form, but it will be drilling. It's just a matter of whether it's 1, 2 or 3 drill rigs.
Okay, thank you for that. Bringing in Kate from Parla. Do you have any sort of thoughts about White Rock Minerals, and do you have a question for Matt?
Yeah, thanks, Andrew. No, I'll go easy on you, Matt. Listen, I am interested in Alaska as a jurisdiction. It's not one that I've done much work in. Can you tell us a little bit more about, you know, the permitting landscape and the environmental approvals that you're going to need up there?
Yeah, look, that's a really good question, Kate. I spent a lot of time understanding that and going to Alaska and talking to the government and then explaining to the Australians, because most Aussies don't know about Alaska. They think it's Grizzly Adams, Sarah Palin and Ice Road Truckers. Now, they're pretty close, but so look, Alaska is in the US, which is really important. A lot of people actually think it's in Canada. So native title is a really good example. So, and there's no offence meant, but the native title system in Australia and Canada can be very problematic and difficult to work your way through. In Alaska, Ronald Reagan in 1971 passed a law that essentially allowed the local Alaskan natives to claim the lands that were sacred and precious to them. And 53 million acres later, that's been settled. So when you step on the ground in Alaska, you know whether you're on native corporation land or not. And if you are, you know who it is. And if you know who it is, you know you're going to do a for-profit, working arrangement. So native title is a lot clearer than it is in Australia and Canada. The other point, tenement management. You essentially have the claims that you peg, and you do literally peg them, as long as you pay your rental fee. So unlike Australia where you've got to do relinquishments, so that's very clear. The other thing that's quite clear is you will know whether you're on state land and where the permitting goes through Anchorage, or whether you're on federal land and it's got to go through Washington, DC. So a lot of people unfortunately think Alaska is difficult because of the Pebble project and its challenges to get permitting. But Pebble has two challenges. One is that it's on federal land, so it's got to go through DC, but also it's at the headwaters of the largest salmon fishery in the world. And if you talk to any American, you don't want to get between them and their fishing and hunting. So, our experiences have been exceptional. I've met the governor. As I said, we went from discovery to drilling in 7 months. Yes, we've got to do permitting. You've got to do your baseline studies. We're on state land. We know the native title situation. All of those things combined to putting it number 5 in the Fraser Institute. Geologically well endowed. It is expensive to work there, so you do need, a major support at the right time. But there are a few Aussies working there, and there's less than 1 million people, so it is a really good early hunting ground for juniors. But at some stage, you've got to, South 32 are there in JV. You've got Northern Star there now. They've got a balance sheet that obviously can afford. So, hopefully I've answered. It's a long answer to your question, but there are many facets to it. I've worked in Bolivia and Myanmar and India and Papua New Guinea, and nothing against any of those jurisdictions. But being in a first world jurisdiction that follows the rule of law and speaks English, or if you're an Alaskan just, I think is an important consideration for an investor, because sovereign risk is often something a bit outside of your control, and an investor should look at, the jurisdictions that the assets are in. So, long answer. Hopefully that was informative for you, Kate.
Yeah, thank you, Matt. And I'd agree with you. The US is a really complicated beast in terms of permitting. And, we've seen both sides of it. It is a fantastic jurisdiction to be in if you're in the right projects and have the right support. Maybe my second question would just be on the balance sheet. I mean, what's your program like for 2021? And are you looking to do any more fundraising, or have you got enough cash in the bank?
So we've got 13 million Aussie in the bank as a result of a very successful capital raising last year. So that allows us, depending on how many drills we want to use, to be fully funded for this year. So, if there was to be any more raising, it's because we want to be more aggressive than 1 or 2 drill rigs. So at this stage, there is no plans to raise. We've got money to do a fully funded 2021 program in Alaska.
Great.
Thank you very much for that. There's a question being sent in by Edith Ticken. In terms of jurisdictions, are there any other places that White Rock Minerals are monitoring, Matt?
Well, so we've got an asset here in Australia, in New South Wales. We would probably play to our strengths. I've worked in South America and North America, so has Rowan, our exploration manager. So, I think companies should play to their competencies and experiences. So, North, South America and Australia are really our focus. We don't intend to go outside of that, not to Africa, not to Indonesia, not to Europe. So that's a short answer to your question, Andrew, hopefully.
Okay. Warren, have you ever been to Alaska? And do you have a question for Matt?
I have, Andrew. I have been to Alaska several times, and it's a great place for miners to go. And I do have a couple of questions. Matt, great to see you again. It's been one hell of a year for you, and congratulations on raising all that money and finally being able to come up for a bit of air, because I know you worked real hard prior to this boom to raise money, and you certainly have been rewarded during the course of the year. So good on you, and good luck with the drilling in Alaska over the coming year. And best to my friend and your chairman, Peter Lester, when you're next talking to him.
I'll pass that on.
Regarding Alaska, Matt, just so I'm aware, Last Chance and Red Mountain, are they geologically associated, or are they geographically and geologically separate so that we can think of them as two separate deposits? How proximal are they to each other? That's the Alaska question. Focus on that one first. And then secondly, I know a point of debate internally in your company and in your own mind, and whenever you talk to investors historically, there's been some discussion of how you prioritize expenditure. You've got Mount Carrington, which is arguably the most advanced project in your portfolio. Obviously, the gold price environment has changed radically. It would look more and more and more interesting with every passing day. How do you currently prioritize in terms of time and money you spend and attention on Mount Carrington versus all the exciting, sexy stuff in Alaska?
Yeah, thanks, Warren, for that. So to your first question, the asset in Alaska is called the Red Mountain Project. It covers 800 square kilometres of contiguous tenement. 500 of that 800 square kilometres covers a syncline, a VMS horizon syncline. And so you can look at that as a separate VMS seafloor smoker deposition geology model. In the east, so about 30 to 40 kilometres, I should say, to the west of the VMS deposits is Last Chance. Now, Last Chance is a Cretaceous IRGS, so intrusive related Cretaceous granite gold occurrence. So it's a separate geological domain to the VMS horizon, but they do sit within reach of each other. So we're actually blessed with two different geological deposition models, if you like, a VMS and an intrusive related granite system. We have, for instance, looked at whether we would spin the VMS out of the gold, because you could physically, geographically separate them. But at this stage, they're two great assets that sit within the White Rock, full 800 square kilometres, and allows us to be able to move rigs between those two and use the same crews and the same chopper in the same camp. So hopefully that answers your question. We've got two geological domains in the one tenement package, which is great, of different styles. To your question about Mount Carrington, White Rock has had it since it was listed in the last 10 years. Look, as a mining engineer, it's a great little project, pre-strip mining lease, JORC resource, JORC reserve, generates a rate of return of 80%, payback of 14 months, spits out 30 million Aussie per annum once in production. But you can't do everything you want for Christmas. You don't get everything you want for Christmas. And so in prioritising to your answer, Warren, the best value uplift for White Rock right now is to aggressively pursue our Alaskan project and the two sub-projects, the Last Chance Gold Anomaly and the VMS. And not to forget Mount Carrington, we're currently looking at options for Mount Carrington that include joint venturing that. It does appeal to certain parties. and we've made no secret of it. And in fact, we announced a joint venture that then didn't execute late last year. So we think that because you can't do everything that you want to, and I'd love to take, you know, Mount Carrington through to development if the funding was there. If we did have the funding, the best value add is into Alaska. So joint venturing Mount Carrington is certainly an option. You know, if there's a cornerstone investor listening that wants to help us take that through, please give me a ring. Or if there's an investor there that might like to buy it at the right price. So we remain open, Warren, to any options that add value for White Rock shareholders with Mount Carrington. But in order of priority, it's Alaska first and Carrington second.
Thanks, Matt.
Thank you very much for that. So let's move on to our next mining update. So our next mining update is from Los Cerros. Jason Stirbinskis, who we briefly heard from earlier, was appointed managing director in August 2019 as part of the Los Cerros merger with Andes Resources, where he also held the role of managing director. Originally a geologist, Jason is a corporate executive with over 12 years experience leading both private and public companies in the mining and mining services space. His experience across a number of commodities, including gold, zinc, lead, copper, and nickel, and has managed projects ranging from greenfield to DFS developments in West Africa, Scandinavia, Australia, and Central Asia. Over to you, Jason.
Thanks, Andrew. And to elaborate on Warren's analogy, yes, we're a tomato in the hothouse of the ASX, and over the last 12 months we've been well and truly blooming, and I'll elaborate on that when we start talking about share price and market cap. We hold two dominant positions in two districts of Colombia in the prolific Mid-Cauca Porphyry Belt, which hosts many multi-million ounce discoveries. Our larger project by area, by footprint, is the Andes project. We've taken some 14,000 surface samples across this huge footprint and identified numerous epithermal and porphyry targets. In fact, 2% of that extensive surface database I just mentioned is over 1 gram per tonne in soils and surface samples. So that gives you an idea of what we might be sitting on. But it's all very early stage at Andes, the Andes project. And I won't be talking about that in any great detail unless some people have some questions about that. But we hope to see significant activity in the Andes project in 2021. But the focus for 2020 and for 2021, and the main reason we've seen our share price go from sub 2 cents in 2020 to over 20 cents on several occasions, is the projects that we have in the smaller but more advanced Quinchilla project, which is about 70 kilometers south of the Andes project. Elaine, if you could put the first slide up, please. Quinchilla is a cluster of projects in about a 3 kilometre radius. Miraflores has an established reserve, roughly 500,000 ounces, grading 3.3 gram per tonne, and reasonably appealing economics in the 2017 definitive feasibility study, which was modelled at $1,300 an ounce, not $1,800 an ounce. So obviously it's more appealing now. Less than 1 kilometre from Miraflores and even closer to the proposed Miraflores plant site is Tesorito. And this is the main reason we've seen stellar share price and market momentum since sort of middle of last year, and particularly from September onwards. There's been some great movement there. Second slide, please, Elaine. Tesorito is a near surface gold porphyry. And I'd like you to draw your attention to two historic drill results. So they've been around since 2017. In the case of hole number 2, even earlier than that. Hole number 2 gave us 384 meters at 1 gram per tonne from 16 meters below surface. And hole 7, if you can see it there on the image, gave us 200 and hole 7 gave us 253 meters at 1 gram per tonne from nearly surface. And the important thing to notice with those two holes is that they're perpendicular to each other. So it wasn't a case of finding something narrow and drilling down it twice and getting good results. The fact that they're perpendicular gives the suggestion that there's potential width, length, and depth. But they're historic. In September of 2020, we announced drill hole number 8, which generated 230 meters at a gram per ton from surface. And that was what led to our share price skyrocketing in the last quarter of last year. Because if you look at the locations of 7, 8, and 2, and those intercepts being a gram per ton, you can start to get an appreciation of potential volume here from surface. And the market reacted accordingly, and we've been enjoying the ride ever since. Now, more recently, we announced hole number 11. You can see that off to the left-hand side. That was 262 meters at 0.84 gram per ton, which sort of pushed the envelope out towards the west further. And then more recently, and if you could go to the next slide, please, Elaine, we announced hole number 14, which well and truly eclipsed every Tesorito result up to that point, recording 320 meters at 1.5 gram per ton from 2 meters below the surface. Quite an incredible result. We put that out last Thursday, and our share price and market cap has reacted accordingly. Inside that is 100 meters grading 2.11 gram per ton from 28 meters below surface. So a spectacular result, comparable to some of the best results in the mid-Colca porphyry belt, and probably noteworthy globally in terms of a gold hit in a porphyry. So Tesorito South is a great story. We have 2 rigs drilling there at the moment. Tesorito North, you can in the north of the Tesorito footprint, is also a potential porphyry target, less advanced, and hopefully we'll see some more activity at Tesorito North this year as well. But the focus will certainly be on the south, given the results we've got there so far. Now, we have a third rig working at Chuscal. If you can come back to me, please, Elaine. I don't have any more slides to share. The third rig is drilling at Chuscal. That's about 2 kilometers south of Tesorito. And based on the surface footprint, it's bigger than Tesorito. So the anomaly on the surface is significantly bigger than Tesorito. So it has the potential to be something really, really exciting there as well. But it's earlier stage, and our third rig is drilling there as we speak. So we have 2 at Tesorito South and 1 at Chuscal. So with 3 rigs running, multiple targets for drilling, and a very established pipeline of earlier stage projects. So we have many targets sitting at Andes and a few more at Kinshira as well. Plus we have $7 million in the bank. It's going to be another very exciting year with lots of news flow, lots of exploration results to look forward to. Thanks for your time.
Okay. Thank you very much for that. I'll go and again kick off questions, and again we just invite if any of the members of the audience got any questions, so please post them on the chat box or wave your hand and we'll unmute you. Can you just tell us a little bit about Colombia as a mining jurisdiction? I always had it in my mind that within that it could have depended as to which region of Colombia your actual mining project was in. Yeah,
that's exactly right, Andrew. I mean, unfortunately, a lot of people watch the Narcos show on whatever that's on Netflix, and they think it's a documentary. And I spend a lot of my time telling people that it's not. Maybe it was a long time ago, but not anymore. There was a peace accord signed with the FARC about 5 years ago, and that gives you sort of the general feeling around Colombia as a whole, that it's far more improved in terms of its risk profile. And you don't need to take my word for it. You just need to see the blue chip, larger mining companies coming into the country, because the risk profile is more palatable for the blue chips. So that sort of provides the backdrop. But then you're absolutely correct. It's based on the regions. Some regions are more mining friendly. Some have stronger environmental concerns and issues, and communities that have differing views. Other areas are far less advanced and require sort of training or education from very first principles. In the background, you have the history of artisanal miners in the area, which use mercury and things like that. So there's an education exercise you have to go through for people to understand that when a Western company comes in, they're not using mercury to extract the gold, and their environmental standards are much higher, and those sorts of things. So yeah, it all depends on where you are. Fortunately for us in Reserelda, we're in an area that's well informed and relatively business welcoming. So we're in a good environment from that perspective.
Okay, thank you for that. Warren, I'm sure that you're going to tell me that you have been to Colombia, because you seem to be a very traveled man. But what kind of questions do you have for Jason?
I have been to Colombia.
It comes as no surprise whatsoever.
I actually owned a piece of a gold mine in the green zone in Colombia, outside of Medellin. The green zone was controlled by the rebels at the time. And the mine, we had to pay the local rebel leader all of the wages, and he supplied the labor. But all of the money went to the rebels, and some of it went to labor. But he ensured the peaceful operation of our gold mine in the jungle. Our mine manager was ex-US Special Forces, who had absolutely no mining experience whatsoever. And of course, the only reason why he got the job was because he was the only one who would take it at the time. So it was a very interesting experience. But yeah, that was in 92, 93 at the height of the cocaine wars. But yeah, I've been to Colombia a few times.
Very different place now, Warren.
Jason, congratulations on those absolutely stunning results. I mean, I love to see that. It gets your heart racing. It gets all the punters in Perth excited, and you were absolutely rewarded suitably in the market by having your shares skyrocket. But they didn't just skyrocket, they're holding their own. So people are believers now, and that's great to see. Wonderful, wonderful intersections. Tell me about metallurgy.
Sure. Yeah, it's classic porphyry metallurgy. We don't see much in the way of copper. The whole mid-Cauca porphyry belt seems to be sort of low in copper. So if you look at the big discoveries like La Colossa and various other porphyry discoveries, they tend to be low in copper. So and that seems to be a symptom of the original melt or something, that it would just be sort of low in copper everywhere. So we don't see much copper as well. I didn't point out that actually at depth we do hit copper. We hit in hole 2 there was 30 meters at 0.19% copper, and in that recent hole 14, we saw 60 meters at 0.12% copper at depth. So we are seeing some copper. Now, if it wasn't for a project to our north called Nuevo Chicuro, I would kind of dismiss that. But the fact is, Nuevo Chicuro does contain copper, significant copper, economic contribution to that 30 million ounce gold equivalent discovery. And a lot of that is present in bornite. And we have bornite in some of our drill core as well. So we may have a mineralogically analogous example to Nuevo Chicuro, but it's way too early to tell what we see at depth. But in terms of metallurgy, we haven't done any extractive testing on Tesorito. On Miraflores, which is the one that is the advanced DFS, that's a breccia. It's not a porphyry; it's a breccia pipe mineralization, and that's again fairly unremarkable metallurgy. It performs well under a conventional 3-stage crushing cyanide circuit with the addition of Merrill-Crowe on the back end, because there is a fair bit of silver in there, and the Merrill-Crowe helps us get the silver out. But other than that, there doesn't seem to be anything deleterious or anything to worry about.
So I just to expand on that point, this is going to be a milling operation. It's going to be a cyanide operation, and I guess you'll just have to watch in terms of the impact of the lesser amount of copper you have on cyanide consumption. Is that basically the story?
That's pretty much it. But you're merging two there. We have the DFS based on the metallurgy of Miraflores, which has no copper in it. Tesorito is 800 meters, a kilometer away, and that's the story that's developing. And of course, if we start generating a economic reserve there, then it's going to significantly change the size of the plant for a start, but everything else as well. In terms of the copper at Tesorito, we don't hit the copper until we're quite deep in the holes we've got so far. So I would think if there was going to be a copper circuit, or there was going to be a copper issue to deal with in the metallurgy, it's not going to happen anytime soon. The first 200 meters is not, it doesn't have any copper in it. So it's an issue for the last 5 years of production or something like that, not the first decade or whatever it's going to end up being.
tremendous.
Thank you for that. Kate, do you have any questions for Jason?
Yeah, I do. Thank you. And yeah, second that. Congratulations, Jason, on those results. They're fantastic. Can you tell us a little bit more about the community aspects that you mentioned? Because obviously that is something that investors are going to be focused on in that region. How have you guys dealt with COVID pandemic, and how do you plan on engaging with the community to continue to have their support and their social license to operate?
Yeah, a very good question, and a more popular question every year. We have a strong social program. We've been in Kinchia for 9 years or so. So we've been there for a long time. They know who we are. They know we're a significant contributor to the local economy. We have an overarching focus which says hire local, buy local, train local. So even if we need to get something from Medellin or something like that, we usually, well, a classic example is we drive past the local hardware store and show them what we purchased in Medellin and say, you should have one of these next time. And so we buy it from them going down the next time we need something like that. Part of our social program is significant community programs. In fact, there was one in late 2019 going into 2020 that personally is probably one of the highlights of my career that I'll reflect on once I'm retired. We took 18 female artisanal workers, and as you can imagine, artisanal workers is a very high risk, dangerous job. And we took 18 women from that environment and trained them up in all aspects of creating banana chips, plantain chips, from production, health and safety, logistics, management, economics, the whole thing. We trained everyone. And we actually commissioned a plantain or banana chip business and took them out of mining. And it was a fantastic project. And as I said, I will look back on that as one of the highlights of my career, to be able to do something like that. In terms of artisanals, we do have an artisanal workforce at Miraflores, and we have contracts with the vast majority of them that essentially says if we need to start working in an area where you can't work alongside us or we're over you, then there's terms in those contracts that explain employment opportunities going forward or paying out their retirement and all those sorts of things. And so the vast majority of those artisanals have those agreements with us already. And as I said, we're welcome in the local community. We've been there for a long time, and hope it stays that way.
Yeah, thank you. And maybe the second part of that question is sort of the investor landscape. And again, we touched on this as a question for you as well, Matt. With the lack of the opportunity to travel and engage with particularly your institutional and retail investors, what's your plan for 2021? How are you going to continue that engagement and that momentum that you've both sustained?
Yeah, another good question, current question. Let me answer that in two parts. First of all, on a practical perspective from the operations, there are some 70 people in the company. 2 of us are in Australia. The other 68 are in Colombia. So, and the vast majority of those live in Kinchia, and Kinchia has done a remarkable job in managing coronavirus and such. So the operations has been essentially business as usual. In terms of getting out and into the market to promote our story, when you hit 320 meters at 1.5 gram per ton, the market tends to come to you, I've noticed. So that's certainly helped. But opportunities like this are great. We have a very strong social media presence. I'm on Twitter, and I noticed there's a few other groups that follow us, and there's lots of dialogue on those groups as well. So we're getting out that way as well. I have developed the habit of when the opportunity or when the circumstances deserve it, making small videos myself and putting those on our website. In fact, there's one at the head of our presentations page at the moment, which is reasonably current. It's before the 320 meter hit, but everything else in that is hopefully consistent with what I just said.
What about you, Matt? Do you have a social media engagement or an investor relations engagement strategy at the moment?
Yeah, look, it is a good question. We touched on it earlier. So I think the industry has been really resilient and adaptive to the COVID and restrictions on travel. And these Zoom meetings are a good example of a new era in conferences. And I think we won't be going back to the way it was. I think a lot of physical conferences will not survive. I think people have realised that they can do it from their home at any hour of the day without the travel and the accommodation costs and the jet lag that goes with it. So I think these sorts of e-conferences will be to a degree into the future. as I said earlier, I do miss the opportunity to sit opposite a real person and have a real coffee. And given that I'm based in Ballarat, you know, the centre of gold mining in I'd like to say Australia, but I'm sure Kalgoorlie might object. You know, we can now revisit people in Melbourne. So, you know, physical contact with the shareholder base is important. I do now do regular Zoom meetings, for instance, with Crestcat, our largest shareholder based in Denver. And also we have an investor group in New York that we manage time zones. Like Jason, we do have an up-to-date website so people can find the latest presentation of January this year to give you an idea. There's also an interview, a podcast interview I did only a few weeks ago that's there. So certainly, Kate, to your question, learning to use the digital media more. I mean, I'm a little bit old. My grey hairs probably show that. My kids call me a techno-tard. I'm actually not allowed to be on Facebook. So it's been a lot of a learning experience for me, but I think, you know, this will be the way of the future to a degree. And you're right, a bit more focused by the mining industry, which can be a little bit slow to adapt new technologies from time to time, I think is important.
And actually, just to interject, I obviously got a question for Kate and Warren, because you've obviously asked about ESG there. Kate, in terms of for Parlour Investments, how are you sort of like when it comes to like investing into mining companies? What sort of like key sort of ESG criteria are you sort of using, and how has that sort of changed?
Yeah, thanks, Andrew. So it's a very hot topic at the moment. I mean, one of the challenges at the moment is reconciling all of the different guidance in terms of disclosures, SASB, TCFD, etc. There's a multitude of guidance. I think SASB is one of the most useful ones because it has specific guidance for our sector and how to analyze the various criteria and thresholds within it. We don't generally apply, you know, exclusionary tactics, but we do, you know, we integrate ESG, I'd say, from sort of beginning to end in the investment process, from screening investments to looking at ways that we can improve from a valuation perspective and also potential exits. So I think it's deeply embedded in our strategy at this point, which I think is probably the same for most investors in this landscape, but we don't adhere at the moment or report against any specific financial disclosures at the moment.
And Warren, for yourself, when you're looking to make investments, what sort of like ESG criteria and green lights and red lights do you particularly look out for?
Overall, from a policy perspective, Andrew, it's pretty specific. When we formed the company not quite a year ago, one of our major shareholders was Andrew Forrest. And Andrew is very specific and very demanding regarding his ESG efforts and requirements. Certainly those are very high profile and well known in Australia, perhaps lesser known around the rest of the world, but given his pace of investments in the industry around the world, becoming better known. And so when he invested, we adopted his ESG policies. So those policies are embedded in our policies and procedures. You can read about them on our website. So they're very specific about things that we can and can't do.
Okay. And maybe if I could just add on that, I think one thing that's important to note is that people can often see ESG as a bit of a box ticking exercise. And one of the things that really expands your horizon is actually thinking about ESG as sustainability for our industry, you know, needs to be less focused on short term. I mean, short term is fantastic and we all get excited about it, but we need to be looking at the full life of mine and beyond. You know, how do we make a genuine difference in the countries that we operate, in the communities that we operate in? And so that, I think, is a bit of a fundamental shift. You know, people aren't necessarily reviewing projects with a sort of green light or red light or amber light anymore. You've really got to take a step back and look at whether or not the management and the company itself has a long-term strategy and a resilient strategy. So that, I think, is a big focus for us these days.
One charge that is sometimes, and say, that is sometimes leveled at the mining industry is sometimes people will sometimes say to me, oh, I think that ESG is taken more seriously at the sort of the senior production end and like less sort of seriously at the exploration end. But it seems to be something that seems to be sort of like changing a lot. I mean, going back to yourself, Jason and Matt, have you sort of seen sort of like, you know, you've obviously been in the industry for like, you know, a long time. Have you seen sort of the ESG mindset change amongst exploration juniors over the last sort of few years?
You'd like to go first, Matt?
Yeah, thanks, Jason. Yeah, look, it's probably, my opinion, it's probably a bit of a trickle down process. You know, I 10 years ago was on the executive committee for Rio Tinto, and my boss was Sam Walsh. So, you know, that was put aside the gorge issue. You know, that was very much embedded in the big companies. I've also worked for Western Mining and Renison Goldfields when it was still around. So I think at the big end of town, you know, it was an important component. You know, I've been on the Minerals Council of Australia as a, you know, state chairman and what have you. Change that now to the junior end. It's not as evident in investor discussions. And it would be an interesting exercise, but if you looked at most junior explorers' slide decks, you'd be lucky to find a slide on ESG. Now, that will change, and if the junior doesn't seize the initiative, they'll be forced to, or they'll be marginalised. So it is an issue, but I think at the junior end, where often it is a matter of survival, you know, about the nice to have and the need to have. I think in the past, maybe ESG was seen as a nice to have, but I think more and more industry will wake up that it's a need to have. That's probably my answer to it, Andrew and Kate.
And
from my perspective, yeah, from my perspective, I agree with what Matt was saying, but I think at the junior end, you have to be very smart with how you approach the S in ESG, or the others as well, but the S in particular, because you don't have a lot of money just to throw at things, and the shareholders are less likely to appreciate taking a significant percentage of what's left in the bank to direct to those sort of things. So you've got to be very smart. And in our projects at the moment, we're doing some things that basically cost us nothing, but have massive impact from a social perspective. You know, for example, it's a bit old now, but a year and a half ago, 2 years ago, we taught some local people, we bought some tools and we taught some local people how to make core trays. And of course, the first were just not usable, but eventually they became very good core trays. And we just said, thank you. Now you have your own business. We want 1,000 of those. And by the way, go tell the company next to us that there is now a Colombian provider of core trays. And they should instantly see that slide at the end of the pack that Matt was just talking about, showing how they're employing local people to build core trays. It's just things like that. That cost me a hammer and some nails, but it's had a dramatic impact on the social program, social elements of what we do there. So it's just being smart, employing local, training local, you know, telling the local hardware store, as I said earlier, what we need, and just making sure they have those bits there, so we don't have to go to Medellin. So you just got to be smarter. And I remember when I was first putting the framework in place for Los Cerros, I came across a document. I think it was the Chamber of Mines of Australia that translated the 17 Sustainable Development Goals, the World Bank's 17 SDGs, into what that would mean for a junior. You know, what would clean water mean for a junior, and what could a junior do? And that was a really powerful guide onto how you can have impact without, you know, blowing your budget.
Okay. And just sneaking like one question here, and like this is for anyone to answer. Has ESG, it's a question from Ian in the audience, has ESG worked its way into executive incentives, hurdles and plans yet?
So hi Ian, how are you? Good to see you again. I can see you with Sydney Harbour in your background. Yeah, look, not yet is the short answer. You know, to Jason's point, juniors need to be nimble. Sometimes it's a bit hard to define what your KPIs are when things are moving, but I think you would probably agree that ESG should be common across the board, no matter what your targets are in terms of, you know, JORC resources or tons or what have you. But yeah, short answer, not yet, but I think that's going to be inevitable, which was part of my answer previously.
Okay. So I think we're up to the hour mark. So I think that all that remains me to do is to go and thank our panelists, Warren Gilman from Queens Road Capital, Jason Stirbinskis from Los Cerros, Matt Gill from White Rock Minerals, and Kate Southwell for Par Investments. Also, a special thank you to our sponsors, White Rock Minerals and Los Cerros, as well as to the Resource Global Network, our event partners. See you at the next 5 at 5 that will be later on this week. Until then, stay safe. Thank you very much.